I think there's better value in the stocks.
You've been an outspoken contrarian and right and for a long time. But I'm wondering, now that all of what you've been preaching for the last decade and probably longer is coming to fruition, and gold is $1,850 or whatever it is today, who's contrarian now? Is it you? And I'm wondering, is it not somewhat contrarian and therefore bullish in your core philosophy to be long U.S. equities or long U.S. real estate?
Well, first of all, gold isn't cheap anymore. That's too bad for the latecomers to the game. But it's going higher. Don't worry about there being a bubble in gold right now. There's not a bubble in gold. It's just coming to the public's attention, but there's no bubble in it by any means. I think that in terms of today's dollars, it's not at all unrealistic to see gold at $3,000, $4,000, $5,000 an ounce. When will the top in gold come? I expect when Newspeak or Slime magazines, should they exist that far in the future, several years more even, when they run a picture of a golden bull tearing apart the New York Stock Exchange, that would be the key to sell gold and buy stocks. Now, why don't I buy stocks now? Because they're not cheap now. People forget that historically market bottoms have occurred when the market as a whole yields 6 to 8% in dividends. I think by the time the market bottoms this time, it could be yielding more than that, and that's after they cut dividends. So I have no interest in stocks. I'm getting kind of interested in American real estate. If I owned Vancouver real estate, incidentally, I'd hit the bid tomorrow morning. This is one of the last remaining bubbles in the world in terms of real estate. But I'm looking to buy single-family houses right now, actually in Las Vegas. Maybe a little bit early, but I'm getting interested. But generally, I'm not interested in real estate. Bonds, forget about it. Incidentally, that's one of the best one-way speculations. You can make a fortune being short bonds at this point. So just a few thoughts.
So you said a minute ago, and everybody kind of says this, that it's when the gold bull's on the front page of the New York Times, obviously we're at the top of the market. And I've got some friends in around Vancouver. Obviously, I know you're a junior resource sector investor and a junior gold stocks investor particularly. And in the spring, Sean Ryan, the famous Yukon prospector, was on the front page of the New York Times. And I remember saying to a buddy of mine, I mean, maybe this is the top. And since then, junior securities haven't done very well. And are you sure right now isn't that top?
Yeah, I'm pretty sure it's not the top, actually. Gold is over 1,800. It's been driven here by fear and by prudence. And that's why you buy gold. And you don't buy mining stocks because of prudence or because of fear. So mining stocks, as we speak, are very, very cheap relative to gold. The reason I like them right now, though, is because with these trillions of currency units that are being created all over the world, there will be other bubbles inflated. A bubble eventually will occur in gold. Not yet, but it will occur in gold. And it's likely to occur in mining stocks, especially these junior mining stocks are likely to be a bubble in the future. They'll catch up and exceed gold as the public piles into them looking for some way to save their capital. So, but don't refer to them as an investment. Refer to them as a speculation. An investment is buying into a business that produces and pays dividends and is predictable. These things are a crapshoot, actually, as a group.
So back to mining stocks and risk reward. I want to just talk about it for a second. Like I spent a time in the bush last month learning how to be a bit of a prospector from a great guide, and what I got appreciation for was I guess sort of the romance of exploration and the statistical crapshoot of the fact that you need so many passionate people toiling and working hard, spending their careers exploring to make a discovery. You need thousands for every few discoveries that are made, and which was why it makes me feel like Vancouver's in a special place because of the significance of the world needing metals. But in your newsletter, you guys talk a lot about junior mining stocks, and it seems like it's getting positioned for a speculative mania to come. But the risk reward really is it's for people with a huge appetite who can really afford to lose it all. So how do you really encourage a retail or a novice investor to participate in something that is so risky?
Yeah, it's very problematical because there are several thousand so-called mining stocks traded here in Vancouver, and most of them have nothing but a hope and a dream. Most of them don't have a prayer of finding anything. Most of them are just crap. So it's fraught with dangers for the average investor. All I can advise is to educate yourself. I mean, you've got to start reading books about geology and studying the markets, and then interviewing the guys that run these companies until you start getting a sense for who's real and who's a flake. That's what you've got to do. Most people don't do it. They just buy a stock because it's touted to them by anybody from a friend who knows less than they do to a taxi driver. So of course they lose money.
So how do you see this sort of speculative rush into junior mining stocks playing out? Like, obviously you're arguing that uneducated people are going to get into the space and drive the price of these stocks up, and I'm assuming that's when you and your subscribers will be selling.
I hope so, anyway. Yeah,
Sure.
That's absolutely right.
So how is this going to start? Because I see a lot in the media of people saying, screw Vancouver, don't let them trick you. Back to early '90s, there was a lot of negative sentiment about what we do here. How do you think it's? I feel like a passionate resource advocate, but how does this trigger? How does this begin?
Well, it's good to remember that the junior mining sector is the most volatile sector on the planet by far. They're more volatile than the internet stocks ever were during the 90s. And volatility is your friend, actually. It gives you the opportunity to sell and buy at radical extremes. And through the 70s and the 80s, the market, the junior resource market, moved upwards 1,000% as a whole, and then lost 95% of its value, and did the same several times in several cycles. So this is a wonderful opportunity that it presents, and I wouldn't say that it's necessarily cheap right now, but I would say the odds of a bubble being created are great. So I think this is a good time to start looking at quality issues.
Sure. So what's going to propel the bubble? What's going to propel the greater fool theory and pushing, I guess it's Americans into our junior stocks? How's that going to happen? Because it doesn't seem like the media wants to let it happen.
Well,
Do we need the media?
Do we need the media?
In this particular instance, obviously. You are a media in some sense. So.
Yeah, this is. I don't have a crystal ball, okay, and I'm not a fortune teller, so I can't assure you that it's going to happen, and I certainly can't give you the time that it's going to happen. But at some point, a bubble will be ignited in the precious metals, and it is entirely likely, as people look to panic out of dollars, they're going to go into securities because, at least theoretically, stocks represent a claim on real wealth. So you put those two things together, a boom in gold and possibly a boom in the stock market, not based on fundamentals, but just based on people wanting to get out of dollars, and you could have a super boom in these things. I wouldn't doubt that there are going to be some issues in between now and if we talked again in 3 years that are going to have gone not just 10 to 1, but 50 to 1, even 100 to 1. It's happened in the past. It'll happen again in the future. At the same time that a lot of these stocks are just going to blow up and dry away because the only gold that they have is printed on the face of their certificate. They don't have any in the ground. So
do you think it'll be a short and sweet bubble, or do you think will the end be raising of interest rates and this scenario that this short but painful moment where we all take responsibility for the debt we have and start to build a new, like the new boom you described?
You know, everything eventually trades for its intrinsic value, however you want to define intrinsic value. And that's going to include the dollar, which is going to reach its intrinsic value. And it's going to include most of these mining exploration stocks, which have no intrinsic value. But some of them are going to hit the mother lode, so to speak, and are going to go 50 to 100 to 1, and it's going to be justifiable. And I think the market as a whole, since most people don't know what they're going to do, and they're going to buy all kinds of stuff, I think the market's going up from here. Now, I could be dead wrong about that. Like I said, I don't have a crystal ball, but I think that's what's likely to happen. So if you want to speculate in something, and people are going to be forced to speculate in the years to come just to hide from the consequences of the government's inflation of the currency, I think that junior mining stocks, for people that know what they're doing, is one of the best places to be. I think there's also likely to be a bubble that develops in biotech stocks for a number of reasons, and I speak as a long-time amateur science buff there. I'm friendly towards those as well. And I'll give you a third speculation that I think is worthwhile, and that's being short bonds. That's a triple play if you're short bonds at this point, which are at all-time highs. Interest rates have to go up, way up, which is inverse to the fluctuation of bonds. So that's number one. Number two, the dollar is going to collapse, which is also going to destroy bonds. And number three, you've got the default risk, and that premium is going to go up. So if you're looking for one sure speculation over the next 10 years, it's get short government bonds, long-term government bonds. So those three, there's lots of speculation. There's always a new train